Okay, so I'm going to start the class and end in the next 20 or 30 minutes. Okay, so let me go straight to the point. This strategy is going to be the strategy I will use only for this week signal in binary option. Okay, so I'm going to use only this strategy in binary option. And what does this strategy look like? It's something like most of the time, some of you might be familiar with what we call MPL zone. Okay, MPL trading zone. For instance, if we have a bullish trend, something like this, okay, then you draw horizontal line to the next or to the left side, to the right side, then market reacts to this level, okay, for a while, and then drop, okay. So if our entry is going to be from this zone right here. I think it's something you are familiar with. Okay, our entry is going to be from this zone right here. So we wait for the price to reach this level. Then we enter a trade with 5 minutes expiry time. Okay, because it's something that is not we are not expecting the price to drop. Okay, we only want the price to move away from the level at least 5 minutes expiry time, because the market might decided that okay, the price might decided to drop for a while, then continue to push higher. Okay, we just want the price to move away from the level in the next 5 minutes. So that is that. I'm going to show you some example on the chart. Okay, so this is the strategy we're going to use for this week in our binary signal with a 5 minute expiry time. Okay, take a look at this example here. You know, we have this downtrend. Okay, we have this up, then we have this downtrend. Now look closely at the previous levels on your chart, or look closely at the significant levels. What I mean by significant, something that you see the market react multiple times. What I mean is that we are expecting the price at least make a reversal multiple times. Like this is a round number level. You see the price reach this level, reverse, break, reach this level, reverse, break, reach this level, reverse, something like this. Something like this when the price continuously keep reversing from this level. So this is what we call a significant SNR. Okay. So look on the left side, look for a significant SNR on the left side. Okay. Here we go. We have a significant SNR from here. Okay. If you extend the line, you see the significant SNR from this level. Okay. Now look on the left side. What do you see? We have the price respects this line. Okay, the price respect this line multiple times. That is what we call significant level. Then this is the last resistance level. Then we see the markets start to we see the price drop from this level. Okay, then the price start to reverse to the upside. Then also the price break the significant level, then drop again, reverse again, then drop. You see this last red candle here? That is a sign, you know, that after this last red candle, the next candle was a red with upper shadow. This upper shadow is a sign of buying activities. Okay, the buyers' activities. The upper shadow, because the moment the price stopped at this level, buyers decided to go up, then drop. So in that case, we have a hidden supply around this area. So what we do is wait for the market to react here. Okay, if the market drop, then return back to that level, wait for the price to react at that same level, because this is how the price reacts at the significant key level. Resistance, support, support, resistance, resistance, resistance. Then this is the last resistance. Then finally, the price break the resistance, then touch this resistance, become support, rise again. Then this last candle close inside, buyers decided to enter, then the price drop. So what we need to do in this situation here is that we have to mark out the significant level. Okay, we have to mark out the significant level as indicated on the chart. Okay, so if I put my line here, so if I put my line here, so we have the significant level here. Then look on the current price here. See that this is a price reaction. Okay, see that price drop to this level and make a small pullback before continue to push downward. So we draw our zone right from the above of this line to the shadow. Okay, sometimes it can be candle, sometimes it can be only shadow. So you extend the line, you extend the zone to the right side. Then you see that the market retrace back. Okay, play for a while, then retrace back to that zone. You can see the market quickly reverse immediately. So our entry is going to be when the price touch the zone. The market might simply reverse immediately here, but it takes some time, takes some minutes before the price approach the zone. Okay, so where our entry is going to be from this zone, which means you're going to enter the trade once the price touch the zone. Okay, so let's say 5 candles. This is your first candle, second candle, third, fourth, and fifth. You can see the price drop to the downside. So all you have to do is pay attention to the price action. Okay, look for a significant SNR, support and resistance. Okay, this SNR can be a flipped support and resistance. Okay, so it's happen most of the time on the chart. Okay, take a look at this example here. This is significant SNR. Okay, extend the line to this. We have resistance, then we have support. Okay, check on the left side. Let's see. Okay, see that again, support and support. So that is our significant SNR. Now, you see the price violate the significant SNR, touch the support, then touch the resistance, become support, again become support, and this is the last time the price reverse. Okay, the price touch the support again, reverse, then break. Okay, so the above, the first one I showed you is the rejection, but this time it's showing a green candle as order block. So the price above the zone before the breakout is your entry zone. In this case, we call it the MPL. This is the MPL level. Okay, so immediately the price retraced back to the MPL level, the market drop. So your first entry will be when the price retraces. You can see that this time the price didn't take a long time before it dropped or before visiting the zone. Okay, sometimes it might take hours, sometimes it might take minutes, it might take seconds. Okay, but this time it only take a few minutes before you approach the zone the second time, then drop. Okay, so it's very simple to understand the chart. You just have to wait for the right moment and the right opportunity. Okay. Um, let's see another example. Okay, now take a look at this now. So here we have significant SNR. You can see resistance. Okay, you see support right here. Okay, this strategy only work on any type of markets, either OTC market or real markets. Also, it work on all platform, either IQ option or quotes or pocket option, any other binary platform. Okay, so the same thing, you can see support right here. Okay, you can see green to red resistance. So here you also have this price tested, the resistance becomes support, becomes support, becomes support, and this time this is the last candle. When the price touch the support, it reverse a little while, then break and continue to push downside. So this is the last green candle before the break. So what we do in this situation is that we mark out the zone for entry. Okay, mark out the zone, something like this, extend it to the right side. So you wait for the price to retrace back to that zone. Okay, you see that this time it only takes a few minutes. So we have the first attempt, but still the market still make another attempt to push higher. And this time the price close inside the zone, the price start to reverse to the downside. So we have the first candle, second candle, fourth candle, fifth candle, sorry, third candle, fourth candle, and the fifth candle before the market start to go more down. So this is the only strategy we're going to use for this week binary signal. So if I see any of this trade setup this week, that is what we're going to use. Okay. Um,
Okay.
okay, it has already occurred here because here we have significant resistance here. Okay, you can confirm the level on the left side. Okay, it's in the market is okay, but let's see significant resistance here. See the market reverse here. This is a little big breakout, then continue to push higher. Then this time, this candle close inside. Then the next candle form a upper shadow, a rejection. So our entry will be above. Okay, our entry will be above. So let's extend it to the right side. Okay, and see the market here take some time before it move away from the zone. Okay, but still if your entry is good, you might still want this trade. Okay, so let's say for example this candle close inside the zone there with a rejection. Your first candle is here, second candle, third candle, fourth candle, then fifth candle. If your entry is here, you might still want the trade. But if your entry is more than 5 minutes expiry time, you might still want the trade. And you see the market is still going more down. Okay, so it's very simple. You just have to observe the price because sometimes the market might give you a fake move. For instance, if the market is moving like this, drop, move, then you draw a line. If the price break the previous resistance, then the market tested the resistance, something like this. Okay, then react. When the price reacts from this resistance becomes support, then break. So this is your entry zone in the future. If you wait for the price to retrace back to that zone, then you place your trade. There are so many things that could happen here. Okay, sometimes the market might just not make any reaction at that level. It might just continue to reverse the downside. So I would advise you, don't trade like this. Don't trade if you don't see any reaction at the last last reaction before the breakout to the downside. If you don't see any reaction there, don't place your trade. Okay, it's not safe. Okay, what again here? Okay, take a look at this. This one seems to be more confusing because we have resistance here, then this one break out again, drop again, continue. Then the price start to respect this support. So definitely we have a new resistance here. Okay. So if you look at it very well, which one should you choose? Is it this one or this? Because this one also is a resistance. Okay. You can see support, supports, then also a resistance. You see again resistance. Okay, the second line support. Okay, support, but this time the upper one also is acting as a resistance as well, because if you check on the left side you also have a significant resistance, because the previous one, the upper line, is also resistance. If you check again, you see the support. Okay, the support. So if I'm to draw, or if I'm to trade in this kind of situation, I will choose the both of them, because we have breakouts, resistance breakout, also we have resistance breakout. Then the market start to range for a while, testing the second line here. So if I want to adjust it, I'm going to adjust this line. Okay, the first line is already initiated here, then second line is here. So if I want to adjust it, I'm going to adjust from this line. So that means if the market is going to retrace or break the resistance completely, it's going to be bouncing inside these two lines. Okay, it's going to be bouncing inside these two lines. Then inside these two lines, if the market make a retracement, consolidate for a while before breakout, so my entry will be from this multiple candle zone or base, multiple candle base. Remember the multiple candle base on the our previous classes in binary option. So that is your entry zone, the multiple candle base. In this situation, you don't choose one candle as your entry zone. Okay, because if you look at it very well, it is not this last green candle, because you see the market retrace, but after testing this zone, the market retrace bounced multiple times, tested the zone before the breakout occur. So this time we have multiple base. So if I want to draw the multiple base as the supply or MPL zone, then I'm going to draw it from here. Okay, I'm going to draw from here because this is where the consolidation started before the breakout to the downside. So the market retrace back to that consolidation zone, then start to reverse. With your 5-minute expiry time, the price still goes down. Okay, so here you might be wondering, or you might try to ask a question, why did I choose this trading these two lines? Well, it's very simple. You must observe the price action, because here this is the resistance before the breakout occur, and here this is upper one. So markets has to be bouncing up from in or between these two lines. Once the price break out completely from the two resistance, then bounce up, bounce up. So here we have as if the neckline, then this time we have consolidation for a while before the price break to downside. So market retrace back and start to reverse to downside. Okay, so let's see one more example. Now take a look at this. If price is going to retrace, okay, back to this level, this is going to be your entry zone, because here we have support. support, breakout. The market tested it as a resistance. Again, this time resistance before the breakout return upside. So here is going to be your entry zone. So you wait for the price to retrace back to this zone. Okay, see that sometimes it might take hours before the market retraces back, but observe closely. The price is going to react from here. Okay, okay, same thing happened here. Okay, we have significant support, support one, support two, support three. Here is like resistance. Okay, here support. So that's significant support. Then this time, market reacts after touching the support, reacts, the price drop, then continue to push higher. So by the time the price retraces back to that level, what happened? Okay, here is your entry. So what happened? There was a rejection, the market rejects, then push higher. Okay, multiple times. But this time, when the price visits the level it was, then the zone is not strong enough to hold the price, the price movement. This time, the market is going down. Okay, so the first attempt will be your priority. Always trade the first attempt. Don't trade second attempts. So I'm looking if I can find any live analysis. Okay, and here, okay, the market respects this. Okay, but this time the market is still visiting this area, but this is another supply zone because here you still have another entry zone. So the market is expected to react from this zone. Okay, you see a rejection first. See a rejection. Okay, always trade when the price touch the zone. Okay, let your entry be a little bit earlier. Okay, not like this. Don't trade when the market has moved away from the zone. Okay, this is not the live account, so that's why I can trade anyhow. I think we should look for another trade opportunity. Okay, here's another example here. Okay, here's another example. So entry zone should be somewhere around here. Okay, because here we have resistance, resistance, it becomes support. Then this time, as the price tested the support, we trace back for a while, then break. Okay, the first attempt is failure to return. So this time the market takes some time. It might actually revisit the zone one more time before it finally reverses. So our entry zone should be somewhere around here. Okay. So let's see what's going on here. I think the entry here is very bad. You can see market move away from the zone and then retrace back again with two more candles. Okay. So this was a loss because the entry is very bad. But if you enter the entry here, you might end up winning the trade. I'm using this because this is a new zone entry. The price has already created before pushing the price down. So that's why I say, okay, the market is expected to reverse because it's still mitigating what is happening here on the left side. That's why I expect the price to react from this zone. Okay, since the price is gradually approaching the zone,
Nurse, good evening. Marka. Okay. Okay. I don't know. I was in my house with another.
Okay, a little bit more up. So we expect the price to reach here. Okay, I think the price has tapped the zone. So let's check 5 minute expiry time.
Amen. Eu me estou pensando, de uma vez que me vão, mas não me importa, mas não dá. É já um. Tá. Muito bem. Ora lá, né? Eu conheço a coisa, né?
Okay, that was a winning trade. So we might face some challenges like this. See the market goes down for a while,
Maria del Son,
rise again,
Linkechi.
and this time goes
Yalala Bundinja,
down again, then
Yokita,
start to go down.
Namanya.
But
Amen.
the price is still going down anyway because the price has already tapped from this level. So this is the strategy we're going to use for starting with the binary signal.
Maria
So
del
I see
Son,
this
Linkechi.
pattern.
Yalala
Signal.
Bundinja, Yokita,
So my first challenge is
Namanya.
like late entry. Okay, if your entry is late, for instance, this candle, maybe your entry was on the next candle, you might end up losing the trade. Okay,
Maria
that
del
your
Son,
entry right
Linkechi.
from this,
Yalala Bundinja,
okay,
Yokita,
right from
Namanya.
this
Amen.
zone, the entry should be from there. Okay, then observe the candle that is forming from the zone, then you place your trade.
Maria del Son, Linkechi. Yalala Bundinja, Yokita, Namanya.
So I hope you
Amen.
guys understand. So tomorrow, this is the strategy we're going to use for our binary signal. Okay. Then I will come up with a new strategy
Maria
in
del
our
Son,
class
Linkechi.
next week.
Yabala Bundinja.
So each strategy we're going to be using it for
Amen.
every week. Okay. Each strategy with a new every week with a new strategy. So this is the first strategy we're going to use for throughout this week. Okay,
Maria
so
del
now
Son, Linkechi.
next class next week
Yabala
I'm going
Bundinja,
to
Yokita,
explain
Namanya.
some of
Amen.
my trading strategy. Okay, so I'm going to give you another strategy next week. So good night, everyone. Have a nice day.
Maria